In this video, I want to explain how I trade using supply and demand zones, the power behind price imbalances, and I want to go over a two-step equation that I came up with that helps me come up and trade only high quality setups when I know the odds are in my favor. And it also helps me avoid taking setups that I know I shouldn't be taking that offer a low probability. Now, I see a lot of traders taking low probability setups, not really trading when the odds are in their favor. And if you follow this two-step formula with any strategy and we get the two pieces to the puzzle to come together, this is when we're going to have a valid trade, when the odds are in our favor and when we could take advantage of making the most amount of money in the market. Before we get into it, I'm going to post a link in the description below to follow me on Instagram at InvestaTrade. I post daily trading recaps on here along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. You're seriously missing out if you're not following it. Link will be in the description below. But now let's get right into the charts. So for any strategy, any style, any plan, any trade, there must be a two-step equation before you click the buy and sell button and before you create a plan to enter a trade. This goes for no matter what system you use, no matter what strategy you use, whether it be supply and demand zones. Every successful trader that I know goes by this, and it's a two-step equation where the first one is our where component and the second one is our when and why component. When we get these two components in an equation, this is the only way that I personally could put a trade on. I must have a where component and I must have a when and why component. I see a lot of traders on the internet, they come up with, okay, I'm watching Tesla above $700, and as soon as it crosses 700, I'm going to get in the market long and I'm going to play a breakout. Or, okay, we have a double bottom, we have a support level at $600, and as soon as Tesla or Apple breaks below $100, I'm going to get short automatically. What that is the where component. That is saying, okay, $600 is our where level. This is our level of interest. But a lot of traders fail because they don't have the when and why component to their system. And this is the cherry on top. This is the confirmation for us to have a trade. So it's vital for you to understand where plus when and why equals a trade. And the first thing I want to break down is the where component. And for me personally, supply and demand imbalances give me my where component. I would say 95% of my trades have to do with some type of supply and demand imbalance analysis, whether it be for context, whether it be taking a trade off of a zone itself. But supply and demand zones are so powerful because they give me my where component. It tells me where I want to be active, where my area of interest is to be present in the market. And I basically look at supply and demand zones as advertisers to price. They are advertising areas that I'm interested in. If you want to buy a car, let's just say you're looking to buy a new BMW and prices right now are way too high. They're going for $20,000, $30,000 over sticker. You maybe wait for the BMWs to go down to what the MSRP is. You want price to advertise to what you want to pay. My supply and demand zones are my advertisers to price. They're where I am interested in buying and where I am interested in selling at. So every day in my Discord, I post pre-market plans, setups I'm watching, levels I'm looking out for, and potential trading scenarios. This gives me my levels of interest, and everybody in the community could also see my plan and what I'm watching and why I'm watching it and why I drew certain zones the way I did. Today in the pre-market plan, this is on June 28th by the time you're watching this video, we had supply at 3949, which is this area up here, and we also had demand at 3890 to 3875, which is up here. I said I'm going to be expecting 3949 supply to be tough resistance to get above, and I'm going to be looking for sellers here, and I expect 3890 to be tough support. And I expected the market to basically remain in balance between these two imbalances where supply was going to act as resistance and demand was going to act as demand, where price really could not break above or below these levels. Now, if we broke out of this predetermined balance range, scenario number 2, I was watching for if we got below this 3890 demand zone, strong selling pressure, and weak equities, I'm going to be watching for continuation to the downside where we're going to target our shorts into the 3828 demand zone. So without looking at any external factors and what I'm going to explain after this, I took the market short at this supply zone following the plan perfectly. And I know a bunch of members in the Investor Trade program followed suit and absolutely destroyed this short side plan today. So the market rallied inside of supply, we found selling pressure, and then the market started to drop into our first demand zone, didn't really find any buyers there, and then continued to sell off, putting in lower lows, putting in lower highs all day long, not finding any buyers at demand, and we kept selling off until we hit our target at 3828, very close to the end of the day. Now, why this is important is because you see this chart, all you see is us reject supply and not find buyers at demand. But a point that I want to make is why supply and demand zones are on our charts is because they are my area of interest. What I mean by this is why we have a supply zone here is at one point in the past, we had a supply imbalance where the market made a very aggressive and violent move to the downside that formed that supply imbalance. And what I do as a trader is I wait for the market to test this supply zone again or any other supply zone and see if we could find sellers at a supply zone. Vice versa for demand. Why we have a demand zone is we look for areas where there is a demand imbalance, where the market made an aggressive move to the upside because of, and we wait for the market to test that zone again. And if we find the same amount of buyers than we did at the first time when that demand zone did form, or the second time or the third time, then we could look to play on the same side as those same buyers that formed that imbalance. That's why supply and demand is so powerful, is because they give me my where component. There are where I know buyers or sellers were once present, were once active, and were once very aggressive and strong in the market that caused that imbalance to begin with. They are not magic, they are just areas of interest. Now, the second component to the equation is the when and why component to that top equation that I showed you earlier. And this is the most important. It's the icing on the cake. And it is something that I see a lot of traders not focusing on, not realizing it either. And they struggle severely because they can't bring sustainability in their trading because it's not something they're aware of or focus on. So once we have our where component, it doesn't matter what you use. For me, I use supply and demand like I've been saying. But once we have our next component, we must use price and volume to give us when and why to enter the trade. When, where, and why are three important components. When and why I want to be active. What's my reasoning for entering this trade today to the downside? Why did I enter the market short? Just because we're at a supply zone does not mean I have to take the market short. Just because we're at a demand zone does not mean I take the market long. Again, these are areas of interest. I see a lot of new traders, okay, we're running into a supply zone. Let me get short here just because we're inside of supply. If the market was that easy, I don't even know what would happen. I mean, it's not that easy to trade, right? Same thing for the demand side. What happens if we just got long as soon as we hit demand? We would have got destroyed. So supply and demand or any strategy, there's not going to be an area that, okay, we just hit $100, we're going to bounce here guaranteed. Or okay, we just hit supply, we're going to sell off here guaranteed. I don't want anybody to think that way. It's the wrong approach. These just give us our where, and our when and why tell us to enter that trade. It gives me when I want to be an active participant. It gives me my confirmation, and it puts the final piece together for the trade. It's my validator for entering that setup. Without my advertiser and without my validator, my edge is not present, and I'm a spectator on the sidelines. So I see a lot of people, again, go back to a chart, and let's just say we had Apple, we had a key level or Amazon, we had a key level at 114, right? A lot of traders, what they're going to do is, okay, as soon as Amazon breaks above 114, I'm going to get long. Yes, this may work out for you 4 or 5 times out of 10, but there's no longevity or sustainability that you can repeat this process day after day, and it gives you consistent results with very tight risk and a high reward. It may work out for you in the short term, but in the long term, it's probably not gonna. I see a lot of people, okay, Amazon's above 114. Let me play calls automatically. They play calls, right? We rally about 80 cents. They don't take profit and they get dumped on. They stop out of the trade and they get frustrated. That frustration builds for their next setup where they take another loss and they're just mentally destroying capital physically and mentally, and it's damaging their future and damaging their next setups. So please listen to me. Where plus when and why, that equals a trade. My advertiser in this example, let's just say, is 114, but that's just an area that I'm looking to get long. Or in this case, demand down here at 111.43, right? But I must use price and volume to give me when and why I should enter. Also, it may tell me why not to enter. And that's something that a lot of traders can't accept. So without my advertiser and without my validator, I do not enter the trade. It's very important. Price and volume validates every single setup. Now, why that's important is just what I explained earlier. Let's just say the market came into demand on Amazon. We consolidated a little bit. People see a green candle at a demand zone and they automatically think they have to enter the market long. Wrong thinking again, right? We must use other tools, whether it be the time and sales, whether it be the level 2, whether it be a chart pattern, candlestick pattern, something that's telling us buyers are buying at a demand zone or sellers are selling at a supply zone. In this chart right here, there's really nothing saying buyers are buying at demand, and I avoided taking the market long at this demand zone. Same thing for the S&P 500 plan. Why I took this market short today, I'm going to go over my confirmation reasons right now. So if we were to look at this chart, this 3890 demand zone, we bounced off of it overnight. It was very key for us to hold, and I knew if we got below it, we would have continued to sell off to the downside. Now, 3949 was an important supply zone was because it was also directly above the previous day's overnight high. So I know a bunch of breakout traders, I love fading breakout traders, would have gotten long above a previous high, not realizing we were inside of a supply zone. It's a recipe for a reversal. Guys, please just listen. Supply and demand zones will prevent me from getting into some trades, but it will also give me high quality setups. My old mindset would have thought right here, wow, a green candle rallying right here, right? Not knowing we had supply. Wow, green candle. This looks great. It's going to break out. We're above pre-market highs. You know, we're 3950. Let me get the market long, right? That's my old mindset. But now because of the power of supply and demand, I had no business getting long. In fact, I used the reasoning that everybody was so bullish this morning on Twitter, in other Discord communities and other chat rooms. Everybody was watching the market to the long side today, not objectively knowing that we had a supply zone at 3949, that as soon as we broke above the previous overnight high, as soon as we hit supply, the market began to sell off. Now, at this time, another reason why and where I entered was because if we were watching the level 2, at 3950, there was a very large passive seller inside of supply, an unfilled sell order. At the same point on the time and sales, there was, I want to say, maybe about a 400 lot or even a 500 lot buy order that got filled at 3950, yet there was no continuation to the upside. Meaning there was a very large trapped buyer up here, and there was a very large passive seller that got filled the position. So as long as the market then starts hitting the bid to the downside and pressure is on bulls, when bulls stop out, that is just going to fuel a further sell-off to the downside. So with that analogy, and then the icing on top was watching equities. Amazon failed above the 114 key level. Apple, we have been watching this key level at 143.25. Failed to get above it. As soon as I saw that and the market broke below it, I entered these the S&P 500 short. I actually played SPY puts at 943 when the market looked like this. And my stop loss was above the high. So I was risking about 8 points. And my target was the open and 3913 demand down here. So then we start selling off. Aggressive sellers start hitting the tape again. I don't have any recording of what the time and sales looked like. But if you're watching the tape, there was very aggressive orders which were hitting the bid, which is an aggressive sell order, on top of a very large buyer filled at the highs. Passive sellers stuck up there. We also had the NASDAQ. directly according to the pre-market plan. I could pull this up here if you guys want. We were watching NASDAQ. It was rejecting 12160 supply. I do expect this to be tough resistance to get above, which will be a burden to higher prices. If we got below this demand zone, we were going to play the market short, targeting the next demand zone lower. The NASDAQ hit supply and sold off with the S&P 500. So now we have the NASDAQ selling off. We have the S&P hitting supply. We have sellers factored into the market. We have Apple rejecting a key level. Pull this up here. Apple rejecting a key level. This gave me valid confirmation to enter the market short. Pull this up over here. And it was just an all-day sell-off. We hit demand. And one thing I'm personally working on, I'm not a perfect trader. I've never said I was. I follow my plan and I put risk on. That is the only thing we can do as a trader. But I sold at the demand zone. And in hindsight, the market really never gave me a reason to get out of this position because we kept putting in lower lows. We kept putting in lower highs. And our plan came true where we broke below this demand zone and kept selling all day long with no signs of buyers. I should have held some runners, but I followed my plan and I managed my risk. So the point I'm trying to make in this video is, I could show you 100 different charts. Going on, I just exit out of that, but going on Tesla, Apple, Amazon, market leading equities, indices. Supply and demand works extremely well with the S&P, NASDAQ, oil, gold. It works extremely well because of how liquid those markets are. But I see a lot of traders that learn supply and demand. They learn it the wrong way. And I want you just to understand that it's not magic. Supply and demand zones are my where component, and we must use price and volume. I have tons of confirmation factors that I look for. I explain this in the Invested Trade program. There's many different variables. I'm just touching on the basics and what looks simple to you. But where plus when and why equals a trade. If I'm missing one piece to this equation, I am not taking the setup because I forced trades and I've lost a lot of money on by forcing setups that really the odds are not in my favor. And like I said earlier, there's ways that I factor out some zones that, I'm not really too interested in, or ones that I know that might not provide the best reaction to them. But before I draw any zone, I don't know if it's going to work out or not. They're just areas I'm interested in, right? I'm repetitive because it goes through some people's ears and out the other ear. But there's some zones that I just wouldn't mark. There's some zones that I do mark that I know the market may not react well off of. And that comes with experience. I tell Invested Trade members this all the time. It's also in the course about trends affect my zones. Market context affects the zones. And there's some key points that I label as key zones that give me important zones to really keep a close eye at because they have the highest probability of working. But I don't want anybody entering the market just because we're at a zone. You need more theses. You need more reasonings. I don't even think theses is a word. All you grammar heads are going to be in the comments now. But you need more structure and you need more layers to add to the puzzle. I say it all the time. The market's a storyteller. The market's telling us a puzzle. And us as traders has to be the storyteller. And we got to put the pieces of the puzzle together to come up with a plan. The more pieces we could add to every trade we put on, the higher the quality the setup it's going to be. And that's when we get high quality setups that give us high probability of working out and low risk, just like this setup. Beautiful trade on the S&P 500 on the June 28th. So I'm going to leave you all off on that video. Comment if you have any questions. Drop a like. I would appreciate a thumbs up on this video, especially if you're liking the new face cam. Also, check out the links in the description below. I offer a very in-depth and educational course. It comes with access to the Discord at no extra charge. And I'm going to end the video on that note. Peace out.